Good morning, good morning, good morning. Grand rising, grand rising, grand rising. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom. This is the pre-show mantra. The show will start momentarily. I deserve to be healthy. I deserve to be happy. I deserve to be rich. I deserve to be wealthy. I deserve to be free. My body grows stronger every day. I nourish my body with healthy choices. Every cell in my body is thriving. My body heals quickly and easily. I am grateful for my health, strength, and vitality. The more you learn, the more you earn. Thereby, the more you earn, the more you learn. If you want to master your day, master your morning. Self-discipline is the key to unlocking your full potential. Make a choice of how you want to start your day and follow through. This is a way to create massive momentum. All right, let's get started, y'all. What's good, Trillion Dollar Ticker family? This is the weekend charting edition. Oh, actually, let me start my TikTok live. Give me 3 seconds. What's good, Trillion Dollar Ticker family? This is the weekend charting edition. In this live stream, we're slowing things down and focusing purely on price action, breaking down support and resistance, trend direction, key levels, and we'll turn on the AVGO to check out some signals. Quick disclaimer, I'm not a financial advisor. This is for education and entertainment only. Let's get into these charts, y'all. All right, so our first chart of the day is going to be AVGO. So this is the daily chart. There's no lines on here at all. So we're just going to start with a blank chart and we'll go ahead and chart the whole thing, y'all. I'm going to go to the line chart for easiest charting. We're going to go to the weekly level right here. Go ahead and roll that down to the nearest 10 cent. I do see this level right here. So go ahead and put that there. Then we'll go to the daily. Let's check it out. Where did price react? Price reacted right here, y'all. And then I'm going to just roll down to the nearest whole number. Instead of 2 cents, we'll just make it even, 326 even. And then we'll look for some resistance to the upside. I definitely see this level here clearly. So go ahead and put that on there. Okay, let's see. Our next resistance is going to be right here. This is AVGO, y'all. One of the most valuable companies in the world. One of our trillion-dollar tickers. The market cap of this company is beyond $1 trillion. Can you believe it? Can you believe there are companies whose valuations are over $1 trillion? Isn't that unfathomable? It's just insane if you really think about it. But those are the ones we should be invested in. Okay, so that's what I see to the upside. That's what I see to the downside. We're not gonna make it too complicated, y'all. We're just gonna put 3 to the upside, 3 to the downside, and then go to the candlesticks, and then I see this gap right here. I'm gonna go to this gap, put that gap on the chart. Got another gap right here. Put this gap on the chart. Looks like it came into this gap already. Normally it goes halfway into the gap, so it almost hit the halfway mark in the gap. Let's see if we have any trend lines we can draw on this chart. We may have one to the, here's our resistance, the all-time high, and then where the price reject, where we can connect the 2 points. So it's very close to resistance right here. And then let's see if we have any support that we can draw on here. Looks like it's very close to support as well. Yeah, it's right there, y'all. Okay, let's stretch it out, see what we see. Okay, so AVGO. It's getting ready to break out. Is it going to break out to the downside and fill this gap? Or is it going to break out above this resistance trend line and head to the upside? Before I think that is really bullish to the upside, it has to break this 359 level. So once it can do that, then really the top of this candle is 360.83. So it has to break this resistance right here, and then it has to retest it and go back to the upside. Until then, I don't believe that this is actually bullish. And then to the downside, as long as it doesn't break underneath this 322 level, which would make this next low a lower low, then we are not bearish. But I do see what could be a huge bear flag right here. So we'll just have to see how it plays out. Currently we did bounce here on support. We came back down, bounced again. So we may be heading toward the upside. If we are, I do see some resistance here at 352, then 359, and then 369. And to the downside, I see support at 326. Probably this halfway point here at 320. And then, of course, once it fills the gap, then that can... that's another potential bounce after it fills the gap. And if we talk about this potential bear flag, we'll go ahead and draw that on here. Potential bear flag, y'all. So if it ends up breaking, that's the pole, that's the flag, that's the flag. So if it ends up breaking to the downside, it can really fall and fill this gap down to 308. Alright, so that's what I see on AVGO. Let's check out the technicals according to TradingView. On a daily, it is in a sell neutral. Overall, sell. Moving averages sell, oscillators neutral. Check out the weekly. Still in a buy on the weekly. Still in a buy overall. So that's good. And then let's check out the forecast. Based on 52 analysts giving stock ratings in the past 3 months, it has a strong buy. So that's good. And then over here, the 45 analysts offering a 1-year price forecast. There are no forecasts that are actually underneath the current price. So all these analysts are bullish. With the average price of 461, which is 33% to the upside, and a maximum of 539, which is 56% to the upside. So if you believe in chips and you believe in AVGO, then you may want to buy this dip. Let's see how far we are from all-time highs. Yeah, it's almost 20% off, y'all. 19.5% off the all-time high. Oh, excuse me. Actually, the close of the candle is right here. So it's 16% off the all-time high. 16.8% off the all-time high, which is still a good discount because we prefer at least 10% off the all-time high, but 15% off is better. And 20% off is even better than that. We like discounts when it comes to buying our stocks. So that's AVGO, y'all. All right, let's check out Meta. Meta platforms. Let's go on a weekly. Let's go on a line chart. And let's see what we can find, y'all. I definitely see a big support level right here, where price bounced on a weekly. We'll go ahead and put that right there. And then price did reject right here, y'all. So we're going to put that right there. Go ahead and roll that down to 40 cents. And then we'll go to the daily. See what we got, y'all. Yeah, if it ends up breaking this to the downside, then we got this level right here. 36. Let's go ahead and roll that up to 40 cents. And then we are starting to see some support here. Yeah, I like this previous all-time high as support to the downside. All right, let's go ahead and roll that down 1 penny. And then see where we have to the upside here. Yeah, this support turn resistance looks like a good area here. And then this was big too. All right, let's see what we got. All right. Okay, then we'll go to the candlesticks. Got this gap here, y'all. Big gap. Y'all remember this gap? Man, this gap was crazy. This was an earnings gap, y'all. This thing fell almost $100 after this earnings miss. Ooh, minus 84% because of that $15 billion tax bill that they did not tell us about. Okay, so we got a big gap above price here. So to the downside, first support I see here at 633. Then if we really drop 594, 576. But it's really just been consolidating right here. As you can see, this area here. Oh, this magnet is not letting me do it. It's just been consolidating since early, for the past month. It's just been in this zone right here, just not doing much. So we needed to break out of this zone. So if it breaks out, if it breaks this support at 633, it's coming down, y'all. Well, if it breaks to the upside, we got to get over this 673. Got to get back in this gap, y'all. We're moving to the upside. But it's just been consolidating right here. I don't want to get into it. I wouldn't want to get into a trade right now because it's just consolidating. We either need to move to the upside or move to the downside. But yeah, that's meta. You want to check out if you want to buy shares, not a trade, but you just want to buy shares, then you are 17% off the all-time high. So that's definitely a good entry. That's definitely a good entry, y'all. All right, let's see what we got on the technicals. On the daily, we got strong sell, sell, neutral. On the weekly, we got sell, sell, sell. On the forecast, 71 analysts giving Meta a rating in the past 3 months. Strong buy. The current price is 653.06. Out of these 61 analysts giving a 1-year price forecast, nobody has a price forecast that's underneath the current price. So that's very bullish. The average forecast is 836, which is 28% to the upside, with the highest one being over $1,100 draw. That's 71% upside. So definitely take that into consideration if you're thinking about buying shares of Meta, y'all. Let's see, do we have any trend lines we can draw on here on Meta? I think we do. I think we can draw this here. And do we have any trend lines to the downside? Yep. Okay. Now let's zoom in and see what we got. We're pretty close. Pretty close to this trend line. In the next couple weeks, we'll be getting close to this trend line. Or at least within 2 weeks. It might be sooner than that, but within 2 weeks, we'll be getting close to this resistance trend line. And then if we pull to the downside, we got this support trend line here. So we'll be ready to break out of this consolidation and see if we are breaking out to the upside or breaking out to the downside. But that's what I see on Meta, y'all. Now I need to take a sip of this drink. Give me a second, people. Shout out to everybody on YouTube Live and TikTok Live. All right, there we go, y'all. All right, Tesla on the weekly. Let's find some levels, y'all. Shall we find these levels on the weekly? Okay, so this is a clear rejection here. This is clear support right here, y'all. Try to make it easy. Just let the chart tell you where to put the lines, y'all. That's what we do. Just let the chart let you know. Where should I put these lines? Where did I see big price reaction? And we go to the daily. It's a lot of chop. It's a lot of chop right here too, y'all. Remember we seen that on Meta? Tesla got a lot of chop right in this area. It's hard to do it with the magnet. Let me turn the magnet off in a second, but let me find some more. Price had a nice bounce right here. Once price came down here, he had a nice move to the upside. So we can put a daily level right there. Go ahead and round that up, 1 penny. And then to the downside, they had a nice reaction right here to the downside. Go ahead and round it down. Go ahead and round that down, y'all. Okay. Yeah, we got a lot of reaction right here as well. Okay. Go ahead and round that. And then we had a decent reaction right here. It wasn't a crazy reaction, but it was decent. So this right here, this, and this is all in the same general area. So we'll go with that. Okay, so that's Tesla, y'all. And then we'll go to the candlesticks. Oh, we see that gap up there. Put that gap on there. Okay, let's see if we can draw any trend lines. Oh, this is that consolidation I was talking about earlier, y'all. Basically, this is consolidation, y'all. So it did break out underneath and then came right back up, and that was right back in the same zone. So yeah, I'm gonna need Tesla to break out of this consolidation before I see it go in either direction. So I just wanted to show y'all that. All right, and then let's see if we can find any trend lines, y'all. Possibly. There we go. I don't see anyone to the upside. I don't see any resistance as far as coming down this way. But if we wanted to draw a channel type of trend line, that would be here. So that's what I see on Tesla, y'all. Okay. Let's see. When is earnings? Oh, we got earnings in a couple weeks, y'all. January 28th, earnings on Tesla. It's gonna be huge. It's gonna be huge. Let's see. So to the downside, I got 431, then 413, and then 400 is also a level because that's a psychological level, 400. But if it does end up breaking that 400, we got 391. We do got this trend line right here, so that will be, once it comes down, that will be the third touch of support, which is usually a very bullish signal. Yeah, that's what I see on Tesla to the upside. We got this 455 followed by this 468 and this gap right here. Let's see what we got. Technicals. On the daily, we all neutral. On the weekly, we got a strong buy on the moving averages. We got a buy on total. We do have a sell on the oscillators. And then forecast. Ooh, look at these 9 strong sells, y'all. Ooh, these analysts. We're in neutral. 50 analysts giving stock ratings on Tesla in the past 3 months. We are in neutral, y'all. Ooh, look at this. Look what somebody said. 38 analysts offering a 1-year price forecast. Somebody said $43, which is a 90% drop to the downside. I can't believe this person even got a job. That's so ridiculous. Like, they don't, you know what I think it is? They are valuing Tesla as strictly as a car company, but not as a technology company, not a robotics company. They're not thinking about autonomous vehicles, or they just don't think that it's possible. They're not thinking about the energy. Like, come on, this is so ridiculous. But the average price is 413 of these 38 analysts, and the highest target is 600. All right. All right. BRK.B, y'all. BRK.B. See what we got on the weekly. See this resistance here. Let's go ahead and roll that down. And then I see this support right here. Let's go ahead and roll that up. Okay, and let's go to the daily. This is a lot of consolidation, y'all. I definitely see this price reaction right here. Go ahead and roll that down. Then I see this price reaction right here. Go ahead and roll that up. Alright, so as you can see, once price is in this range, it just likes to consolidate. It did break out a couple times, but came right back in the zone. So I definitely don't want to trade something like this, because yeah, this is a major consolidation zone, y'all, between these two levels. That's all consolidation, y'all. It might break out temporarily for a couple weeks, came right back in. Out for a couple days, came right back in. Out for a week, came right back in. So I definitely don't want to trade something like this. It's just in this major consolidation zone. So yeah, To the upside, it definitely got to break this 506, but really this once it breaks 508, and then to the downside, it got to break this 490. They got to get out of that consolidation zone. All right, Berkshire Technicals. On the daily, we got sell neutral. On the weekly, we got a strong buy in the moving averages. We got a buy on the summary, on the total. So it's a buy, y'all. And the forecast. We are in neutral. We do got one strong sell. Oh, it's not too many. It's only 7 analysts on here in the past 3 months. And this one only has 3 analysts. So as you can see, one person said, nah, that thing need to drop 7%. The other person said it needs to go up 2.8%. And the other person said that thing need to run up 19%, you know. Okay, so it's still very close to all-time highs, so I wouldn't even trip on it too much. Let's check out the algo. Let's see what the algo says. So the algo did give a strong sell here on December 8th. It did hit TP1 before reversing. So had you gotten into that, you would have hit TP1 at least. And yeah, this is just major consolidation. So we don't really like the algo in consolidation because it can trick you. So let's check out AVGO. All right, AVGO on the daily on the algo. It did get a sell here on Friday, December 12th. This was the entry, 359. It did hit TP1. So you would have been good on that. It's like a $20 move, $22 move, y'all. Okay, let's see on a 4-hour if there are any new signals. So we did get a buy signal here, but the market was closed. This was a pre-market signal on Friday, January 9th at 5 a.m. So the market was not open. And then there was the entry level here was 344.25. But you did get a close signal here. So let's check out the 1 hour and see. So it does have a buy here, but this was also on during the pre-market. I like my signals when the market is open, y'all. So that's what I see on AVGO. Let's check out Meta. Meta on the daily. Oh, let me get my stuff off this chart. Okay, Meta had a strong buy on November 25th. The entry was 363. It did end up hitting TP1 and TP2 before pulling back. And now it just bounced on the entry. Exactly. To the penny, it bounced on the entry. So it looks like it's heading back up. It did hit TP1 if you re-entered that trade. But let's check out the 4 hour because that was way too long to still be in that trade. Let's check out the 4 hour. It did get a strong sell on the 8th, but it was at 1 a.m. So I don't like signals when the market is closed, y'all. So it did get a close on this a close signal here, but this was also after the market was closed. So that is Meta. Tesla had a strong sell here on Wednesday, December 31st. 449 was entry. It did hit TP1, TP2, and TP3. So great call for the algo. Let's check out the 4 hour and see if there's any newer signals. It does have a strong buy here, but it was in a pre-market. So just keep that in mind, y'all. Okay. And then Berkshire, it's still in the consolidation zone, so we don't want it. We're not thinking about it. We don't like to buy. We don't care for the signals in consolidation zone, y'all. Let me get a drink. Give me a second, y'all. All right. We back. Okay, so that's that. Yesterday we did do NVIDIA, Apple, Google, Microsoft, Amazon, and TSM. So if you're wondering about those $1 trillion tickers, you have to tune in to yesterday's show. That's where you can check out those tickers. So we did finish the rest of the $1 trillion tickers today. Now we can check out the SPY, y'all. Let's check out the SPY. That is the S&P 500. I already charted this one, so I'm not gonna chart this one live. But we have been bouncing on this trend line, y'all. And then we just hit all-time highs. On Friday we hit all-time highs, so it's nothing much to say about that. Salute to everybody that's invested in S&P 500. You hit all-time highs on Friday. Your account should be looking nice. And then QQQ. It's also bouncing on this trend line. It has to break over this 629.10 to remain bullish. Last time he came down here, rejected hard. So it almost came up there. So it's at this resistance zone here, y'all. So we need some volume to be able to break over this weekly level. But if we do, then I see it going back to all-time highs. All right, SPX. The same thing. This is the index for the S&P 500. So I see this going to all-time highs. It just hit all-time highs on Friday. And then the NAS 100 is just the index for QQQ. So it's the same thing. You got to break over this level. 25,831. Let's check out some sectors. XLK, our technology sector ETF, y'all. As you can see, it's bouncing on this trend line. It is coming up on this resistance trend line to the downside, and then it does have this gap up here. But it looks like it found some support here at 144. So I think it's bullish to the upside. I wonder if it has analysts and stuff with that. No, it doesn't. See, because this is an ETF, it doesn't have any analysts, but it does give you this overview. Key stats: 92 billion under management, y'all. Gives you a dividend as well. Low expense ratio, not the lowest in the game, but very low expense ratio. You can see it's been around since 1998. It tracks the S&P technology sector. Passive type of management, so that means you get a lower expense ratio. Technicals, strong buy, buy on the daily. On the weekly, you got a strong buy, you got to sell on the oscillators. All right, XLY just hit all-time highs on Friday. So that's that. Let's check out analysts. 24 billion under management. Same low expense ratio. These are all State Street funds, y'all. State Street. One of the biggest management funds in the world. Probably top 5. I think it is number 5. Exactly. Passive style. Same 1998. It's been around that long, y'all. This one has a bigger dividend, 0.74%. All right. And then technicals on the daily, strong buy, buy. On the weekly, strong buy, buy. That's why it's sitting at all-time highs, y'all. Check out XLC. XLC, y'all. Very close to all-time highs. All-time high is 119.55. Current price is 117.91. So it's only a couple dollars away from all-time high. It definitely has some support here at 115. It has some more support here at 117, y'all. So it's looking very bullish. So same expense ratio. This one has been around not nearly as long as the others, but this is since 2018. You know what I mean? But it's still a long time. Passive style. 26 billion under management. And it tracks the communication services, y'all. So if we scroll down here to returns, 1.25% the past month, 2.5% the past 3 months, the past year, 21%, the past 3 years, 135%, y'all. Past 5 years, 75%. That was because of that 2022 was a bad year. But 100% U.S. companies. Top 10 holdings, Meta Platforms, 19%. Google, 11%. The other Google, almost 9%. Netflix, 5%. So the top 10 companies are 71%, basically 72% of the holdings. There's only 25 total companies in here, y'all. So it's very, it's not equally weighted. It's very market cap weighted, y'all. And then we got the dividends down here. The last dividend they paid was last month. Got you 37 cents per share, y'all. That's pretty good. I mean, we definitely got some better dividend plays, but that's pretty good, y'all. Next, XLF. Pretty close to all-time highs. All-time highs is 56.52. We do got some support here at 55 and some more support here at 54.25. But yeah, it's very close to all-time highs, so it's not much to say. 54 billion under management. Almost 55 billion under management. Nice dividend, the best dividend so far, I believe, from all three. 1.29% on the dividend. Same expense ratio, 0.08%. This one has been around since 1998. This is the S&P Financial Sector ETF, y'all. This past month is giving us 4.6%. The past 3 months, 4.25%. The past year is up 15%. The past 3 years, 58%. Past 5 years, 79%. It's looking good, y'all. It's looking good. It's mostly in the United States with a little bit of just a drop of Europe. Top companies in here is BRK.B, 11%. Followed very closely by JP Morgan, then Visa, MasterCard, Bank of America, and Wells Fargo. The top 10 companies are 56% of the ETF. There are a total of 78 companies in this ETF, y'all. And the most recent dividend is 19 cents, and it was paid out on December 24th. And for a $55 a share to give you 19 cents, that's not too bad, y'all. That's not too bad. You can definitely buy a lot of shares if it's only $55. But we definitely have better dividend plays than that. I would just point out that is what it is giving, y'all. Okay, XLV, our healthcare ETF. All-time highs, 160. It's currently trading at 157, so it's very close to all-time highs. All right, so 41 billion under management, 1.57% dividend. That's the highest one so far. This one has been around since 1998. This is our healthcare sector. And then majority in United States, North America, with a couple drops in Europe, y'all. The top company in here is Eli Lilly at 15% holding, y'all. Followed by Johnson & Johnson, AbbVie, United Healthcare, Merck, and Thermo Fisher, y'all. The top 10 companies are 57% of the ETF, with a 62 companies in here total. Most recent dividend was 65 cents per share, paid out last month, but it does cost you $157 per share. All right, next is XLP. This is our consumer staples. Had a good couple days. Look at this, up 1%. Day before, up 2.38%. I think this one is not close to all-time highs like the others. Well, it's not too bad actually. $84 is the all-time high, and it's currently at 79. So yeah, it's close as well. It just wasn't looking like that. I just had to stretch out my chart a little bit more. Okay. Let me see what kind of discount this is right now. Not even 10% off, so I definitely wouldn't buy this right now. But yeah, it's pretty close. It's only 6% off the all-time high, y'all. 14 billion under management, 2.7% dividend, y'all. Same expense ratio, very low. Created in 1998. This is our consumer staples, y'all. 100% North America. Top companies in this ETF is Walmart at 11.5%, followed by Costco, almost 9.5%, Procter & Gamble, 7.6%, Coca-Cola, 6.2%, Philip Morris, 5.73%. Give me 1 second, y'all. Give me 1 second. All right, there we go. I am back. So the top 10 companies are 61% of this ETF. There is a total of 38 companies in here. The last dividend they paid out was 62 cents, and that was paid last month for a share price of $79. All right, XLE. XLE is also close to all-time highs. All-time high is 49.49. Let me go ahead and put that on there. Okay, now we can see that clearly. So yeah, it's only a few dollars away from the all-time high. Do see a lot of resistance right here before it gets back to all-time highs. We got this resistance trend line here as well. But yeah, let's check it out. 28 billion under management. The first dividend over 3%, y'all, is the energy sector. 3.09% on the dividend. Same very low expense ratio. It's been around since 1998. All right, 100% North America. And the biggest companies in here are ExxonMobil at 23%, followed by Chevron, 17%, ConocoPhillips, 7%, SLB, 4.5%. So the top 10 companies are 76% of this ETF. And there's 24 companies in this ETF, y'all. Dividend, 37 cents per share, and the share is $46. And the price performance, year to date is up 4% already, and it's only 11 days into the year. Last year, or the past 1 year, trailing 12 months is up 6%. 3 years is up 6%. But 5 years, if you bought it 5 years ago, you're up 122%. That's what I forgot to look at on XLP, was the returns. Okay, XLP, this is the consumer staples. The past 12 months is up 2%, 3 years 5%, 5 years 18%. So this is definitely not something you're buying for growth. These are the bigger companies, the dinosaurs that usually pay a nice dividend. All right, let's check out XLU, y'all. XLU, all-time high, 46.89. It's currently at $42. Let's see what type of discount we have. Almost 10% off, y'all. So if you want to get in XLU, then it's very close to. It's a good discounted price. It's almost 10% off, y'all. And for something with this low cost of share price, $42, that is a very affordable ETF. But I don't know if you want to buy it for growth. Let's check it out. 21 billion under management, 2.71 dividend yield. Been around since 1998. This is the utility sector. 100% North America. Okay, let's check out these returns. Year to date is negative, but we're not going to count that because we're only 11 days into the year. But the 1 year return is 12%, 3 years 19%, 5 years 37%. That's not bad, y'all. That's not bad. Especially for an ETF. That's pretty decent. It's nothing compared to tech, you know what I mean, or consumer discretionary or communications, but it's pretty decent. All right, top holdings. Next Era Energy, 12%, followed by Constellation Energy, 7%, and Southern Company, 7%, and also Duke Energy, 7%. Top 10 companies are 58% of the ETF, and there are 33 companies in this ETF, y'all. All right, dividend payout date. The last dividend was paid a couple weeks ago, 31 cents, y'all. 31 cents per share with a $42 share price. That is not too bad at all. Not too bad at all. A strong sell on the daily. Moving averages. Let's check out the weekly. Neutral, 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 y'all. All right, we got a few more and we'll be done. All right, XLI, very close to all-time highs. Less than $1 away from all-time highs, y'all. All right, $27. 27 billion under management. Pays a 1.23% dividend. Been around since 1998. Same very low expense ratio. Let's see. Over the past year, it's up 22%. Over the past 3 years, up 61%. Past 5 years, it's up 79%. That's good, y'all. That's good. That's very good. It's not great. It's not fire. It's not phenomenal, exceptional, but it's good. That's decent. That's decent. Mostly in North America, with just 6% out of Europe. GE Aerospace is number one, 6%. So as you can see, these are a lot closer to being equal weighted than the others, because they don't even have one that's double digits in the holding percentage. Okay, so the top 10 is 38%, and there's 82 companies in here. Last time I paid a dividend, it was 53 cents per share and $161 per share. XLB, our materials, less than $1 away from all-time highs, so that thing is running, y'all. $5 billion under management, 1.78% dividend yield. Been out since 1998. Very low expense ratio. Okay, this one has a lot in Europe. 21% in Europe, 78% in North America. Lind is the top holding, 13%, followed by Newmont Corporation. Sherman Williams. I heard of Sherman Williams. I haven't heard of any of these three. I heard of Sherman Williams. I think that's that paint company, right, y'all? Okay, so the top 10 holdings are basically 60% of this ETF, and there's 28 companies in here. They paid 23 cents per share dividend for a $48 stock, y'all. Technical, strong buy, strong buy, strong buy. Weekly, strong buy, buy. All right, XLRE. Okay, this one. Let's see what we got. Okay, so the all-time high is at $52. So let's see how far we are away from all-time highs. Over 20% off the all-time high if you would like to get into this real estate ETF. It is at a very nice discount. It is ready to break out either to the upside. It has to break this resistance level, but it needs to get over this 42.91. It's going to be a lot of resistance here at $45. Yeah, let's check it out. Check out $7 billion under management, 3.4% dividend yield. I think that's the highest one of all. There's probably a lot of REITs in here. Okay, been around since 2015. Same low expense ratio. This is the real estate sector. Past 1 year, only up 1%. 3 years, 7%. 5 years, 14%. Okay, so it is positive. Not that much, but that's what we expect from real estate. Okay, so no, there's not any REITs in here. It's just individual companies. No, actually, I don't know. No, there are REITs in here. Because this is O Realty. This is the main REIT that everybody talks about. So there are REITs in here. I don't know if these are REITs. I haven't done any research on these. Top one is Well Tower, 10%. Followed by Prologis at 9%. And American Tower Corporation at 6%. Top 10 holdings, 58% of the ETF. There are 33 total. Dividend paid 43 cents per share with a $40 share price. That is not bad at all. Oh, shoot. All right. Shout out everybody on YouTube Live and TikTok Live, y'all. So that is all 11 sectors, y'all. So on today's show, we covered the 11 sectors. We covered the $1 trillion tickers. We covered the tickers we covered were AVGO, Meta, Tesla, BRK.B. We also covered SPY and QQQ, SPX, the NAS 100, and then we covered all 11 sectors, y'all. So that's it for today. If y'all want to stick around, I'm going to show one of my stock market for beginners, just a preview. So if you are a beginner when it comes to the stock market, I'm going to show you a preview of my video that I created that'll give you a foundation on what the stock market actually is, y'all. Check it out. I'm going to give you about 60 seconds of it.
What exactly is the stock market? It is a digital marketplace connecting the world. It is the central place where businesses find investors and people buy and sell ownership. Think of it like a giant global farmers market. Instead of fruits and vegetables, companies like Apple or Amazon sell pieces of their business. Key takeaways: it's where buyers and sellers meet. Prices change based on supply and demand, and most trading happens instantly on your phone or computer. What is a stock or share? A share is a tiny piece of a company's ownership. The meaning is that when you buy a stock or share, you are literally becoming a part owner of that business. Imagine a giant pizza. The whole pizza is the company, and a share is one slice. You don't own the whole shop, but you own your slice. Stocks and shares mean the same thing, and you benefit when the company succeeds. Why do companies sell shares? To raise capital for growth and expansion. An alternative is a bank loan, which must be repaid with interest. Selling shares means shared success, no repayment, and the company gets the cash it needs to innovate and grow.
So that's a quick preview. If you want to check out the whole thing, it's 8 minutes. Very easy to understand analogies. Just check out my YouTube channel, Matt Rich's 510 AI Music, and click on videos. Now, if you don't have time to watch it, but you just want to hear somebody talking about it in podcast form, you can check out my video right here. This is called Stock Market Introduction, How the Market Really Works. This is more of a podcast style, so I'll give you 1 minute of this preview. Check it out.
Okay, let's unpack this. If you've ever tried to read a financial article or, listen to market commentary, it can feel like everyone's speaking a secret language.
It really can. The stock market, wealth building.
Yeah,
It's like a club with rules only the insiders know.
exactly.
And I think that's why we're here, right? When we looked at the stack of sources you provided, the mission just became so clear. We have to translate that language.
Yes.
We need to establish the foundational mechanics of how the market works, and maybe even more importantly, explain why sitting on the sidelines just isn't an option anymore if you want to build real financial security.
Absolutely. So our promise today is to just take the complexity out of it all, using some really targeted everyday analogies.
Yeah, that's the goal.
We're going to figure out what a stock really is, understand ownership through the pizza analogy. We're also going to tackle the silent thief that's eroding your savings right now.
And we'll show you how easy it is to start building. I mean, with less than $100, using something we're calling the Lego analogy.
It's all.
All right. So that's a preview. If you want to check it out, if you learn better with podcast style, then you can click on that episode, on that video, y'all. This is episode 1. So I'm actually, that's the first episode from our podcast style. I do have a short that I clipped up from here, so you can check that out as well, y'all. So that's it. Salute to everybody on YouTube Live and TikTok Live. This is $1 Trillion Tickers. I will be live tomorrow morning when the market opens. I will be live pre-market, and when the market opens, be giving y'all pre-market levels, opening bell moves, and breaking news. I got a lot of good news to share with y'all from our $1 Trillion Tickers. All right, that's it. Y'all have a good one. Peace, blessings, financial freedom. Peace, blessings, financial freedom. Peace, blessings, financial freedom.